Hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Thursday, August 12th of 2021, and we're going to talk about the headlines that are moving markets, what we're paying attention to at Blanke Schein Wealth Management for our clients, so you should be too. So thanks for watching. So today's edition, we're going to discuss what's next. You know, we're seeing and captivated by the Delta variant headlines on a daily basis, but we're also getting the economic information on a daily basis, which is backward looking, not forward predicting. Of a healthier economy, if you will, by way of GDP, employment, wages, and a few other things. The CPI data is showing that inflation's running hot. And so what's next? Are we entering a Goldilocks scenario where sort of we have the economic growth supported by fiscal and monetary policy, as well as sort of an equalization of the supply chain over the course of the next 12 to 18 months? And trust me, that's going to take some time because the variant's going to work its way through. But all the while, the markets and economy can still move along, but the companies, if they're well managed, well maintained, using technology to their advantage on a go-forward basis, can grow the top line and also at the same time grow the bottom line, so that that growth is still there. So that could be under the Goldilocks scenario, where again, all these bills that are being passed in Washington are going to add more fuel to the fire of an already growing, expanding and hot economy on a go-forward basis. And again, it's not only spent in 1 year, it's spent over the course of 10 years. And remember, we had tremendous stimulus last year, and we're getting more bills that are going to be proposed and sort of passed into law. And that's a lot of spending. Again, trillions of dollars of spending on a go-forward basis. That could set up for many years of a Goldilocks scenario. Obviously, we have to contend with a few things like taxes that could change and sort of modify the future growth implications of corporations and individuals. That does have a significant impact, as well as the on a go-forward basis, is it policy error? Now, what we know from history, if we look back, the Federal Reserve has sort of created monetary policy. QE1, 2, or in 3, quantitative easing, and that's basically just supporting the market by ultimately providing liquidity to the marketplace, as well as keeping interest rates ultra low to basically reinflate or stem off the opportunity for a sort of recession, if you will. And so as we grow out of a recession, or even the thought of a recession, the Federal Reserve has to pull back, right? Provide sort of what we call it is they have to take the punch away from the party, if you will, as right now everything's flowing in terms of liquidity and low interest rates. And that's sort of adding fuel to the fire of the inflation discussion. But here's what we're going to look at, whether it's the policy error on a go-forward basis. The Federal Reserve has to sort of tiptoe through the graveyard as they go through this, as they always have in the history. Or is it a Goldilocks scenario? So some of the key things we're going to be looking at is the timely data to gauge right now. Now, timely data as it relates to the Delta virus variant. Right now is a summer soft patch, meaning like we look at TSA. We did from day one, we're doing it as well. It's called high frequency data. The folks at First Trust also look at this as well, and as a huge gauge to find out if there's truly growth and there's truly economic activity by way of just people leaving their homes and using planes, trains, and automobiles. The TSA data now has rolled over recently, meaning they're just under 2 million a day going through TSA. That's how they measure. If you recall, 2.5 million was sort of the peak on an average daily use, and now the average is coming down. And now, is it because people are returning, getting their kids back for school, or is it because coincidentally at the same time the Delta variant is now out there and that's more people are staying home? So we're going to continue to watch the TSA data, as well as restaurants, right? OpenTable is another resource out there that provides us information that we can see if the economy is sort of growing or staying the same, or then shrinking on a go-forward basis. So that's good high frequency data that we look to, and then that forecasts sort of economic growth, i.e. earnings for corporations. The U.S. yield curve is steepening. Now, if the Delta variant was a significant threat, economically speaking, both here in the U.S., interest rates wouldn't be turning around. Remember, I said the 10-year Treasury right now is now about above 130. We double tested 112 earlier this month and earlier this summer. And so that looks like a double bottom right now on the U.S. 10-year Treasury, which is good. When interest rates start rising again, that means that the economy, there sees future growth in the economy, and the economy is sort of getting back on its feet right now. And we also look at the 2s and the 10s. The 2-year and the 10-year Treasury inflationary sort of yield curve, and that's steepening, which means here's the two-year yield and the 10-year yield, and it's steepening, meaning like the 10 years going higher. That steepening yield curve also indicates a healthier economy. The longer you get, you're going to get paid more for your bonds long into the future versus a flat yield curve where the 10-year and the 2-year are in the same. You do not want a negative yield curve where the 2-year and the 10-year is negative, below what you would get on a 2-year bond, if you will. This is recessionary. This is sort of no growth. This is like a healthy economy on a go-forward basis. That's sort of how we see it as it relates to yields on the 2s and 10s. So the yield curve is steepening. That's a sign of a healthy economy, regardless of the Delta variant that we see. And then the jobless claims, that trend is still down, right? There's still 10 million displaced jobs, but there's 10 million openings. So right now, is it a geographical thing? Is it because of unemployment? People are going to come off unemployment in September, and therefore we have jobs. The JOLTS job openings report says there are 10 million jobs, corporations, every small business owner I know, and we're here at Blanke Schein Wealth Management, we're looking for talent. We're looking to hire, and they can't find anybody. So I think September, we could see that coming down. Now, what's also interesting, and it goes into the transitory story of the inflation story, one of the number one expenses for any small business owner are employees, the wages. Wages on a gauge have sort of rolled over from an inflation, meaning the average hourly wage is now coming down. It was spiking and now it's coming down. What that really indicates is there's going to be more supply and demand, right? Think about it. More people are going to come into the workforce by way of, let's call it the stimulus, or the unemployment checks are going to roll off. Therefore, more people looking for work, therefore more opportunities for employers, i.e. they don't have to compete so much for wage. So wage inflation is coming down. It's really sticking to the narrative of what the Federal Reserve is calling transitory in inflation. But what I spend money on, and what you spend money on, I think there's inflation still embedded, because we're also going to see the sort of all those costs by corporations passed along to the consumer. At the end of the day, we have to absorb that. And that's called inflation, and that's called sort of the secret tax that we just have to endure as consumers. That being said, how we combat against all this is, again, a well-diversified portfolio, well-balanced. That being said, we take advantage of opportunities when we see them, so we can have our portfolios grow well ahead of inflation. Therefore, your pricing power at home stays, well ahead of inflation. Therefore, you can buy the goods and services you need to go and do what you need to do at home. So that's what we're doing here for our clients at Blanke Schein Wealth Management. That's sort of the scenarios that we're sort of, sketching out from our investment committee, what we have on the horizons, and sort of what to watch on a go-forward basis. Right now, the information is actually positive collectively on a go-forward basis. We're in a good spot. Thanks for watching, and tune in next time. We'll see you again.